Saudi Arabia is in discussions with China to price some of its oil sales in yuan. Let's continue with our emerging action conversation here with Bloomberg Sherry-Ann, co-anchor of Bloomberg Daybreak Asia. And Sherry-Ann, this is primarily oil that they're going to buy from Saudi Arabia. It's going to China. This is not necessarily something new. We know that they've been trying to sort of push this, but they haven't necessarily been successful in striking a deal.
For about 6 years, we've had these conversations. It looks like the debate is now being ramped up. We know that China buys about 25% of oil exports from Saudi Arabia. So that would be a big chunk of the sales, but the report also not indicating whether this would actually happen. And you have now currency analysts coming out and saying, you know what, this seems to be a little bit of a bluff. We know that Saudi Arabia does not have the best relationship with the Biden administration at the moment. And we know that the Saudi riyal is pegged to the US dollar. So what happens if the US dollar currency actually weakens? That will have repercussions for their kingdom as well. We have seen, of course, given the news, the bump in the yuan, which had already weakened given the broader sell-off in Chinese assets that we saw. But I guess it's the idea right now that if you look at history, could this happen? Well, yeah, we have seen other dominant currencies in the past, right? What the Dutch currency in the 17th, 18th century, the Spanish dollar, then you had sterling, then you had the US dollar. It could happen. It seems that the conversations are there, but perhaps not yet.
Yeah, it took like world wars for that to
right,
change.
World War I, then we had Bretton Woods in 1944.
Don't
you be careful with that comment, Romaine. Yeah. You know, Sherry, I think what's interesting, I remember, was it a year or two ago, Goldman Sachs had a report out saying that maybe not 5 years from now, not 10 years from now, but 30 years from now, we could be talking about the yuan being the currency of last resort. Now, again, that's a long time off, and you talk about the restrictions on the currency, but the conversations are there.
That is a big point, isn't it? Because of this war and the sanctions against Russia, US dollar holdings have become a key issue, and some nations are looking for alternatives to the US dollar-based financial markets, right? And we have seen, of course, the yuan becoming more officially one of the world reserve currencies in 2016, with the IMF putting the yuan as one of those underlying currencies for its SDR, the special drawing rights. We have seen developments with iron ore futures also being priced in yuan. We have seen that chart earlier showing this immense resilience in the yuan against trades weighted basket. So that conversation is there. But as you mentioned, capital controls, how tightly it's managed by officials, it's still a hindrance.
Yeah, and I think that those capital controls are probably pretty important to keep in mind. I mean, I think the timing of this is fascinating, right? Because we're talking really about pricing commodities in yuan specifically. But then that contrasts so heavily with all of these regulatory barriers that the Chinese appear to be putting up regarding potential investment in especially their companies with all of the ADR friction that we've seen this week. How is that coming up, that conflict coming up in your conversations? Is it about two different markets? What's the philosophy here, and how do we tie those together?
I think the narrative has changed a lot in the last 2 years. Before the pandemic had hit, before we saw these massive lockdowns in China, we were hearing more about the yuan internationalization. It seems that has sort of taken a little bit of a backseat, given the immediate concerns right now, whether it's a pandemic, the lockdowns, this massive volatility that we've seen in the markets. And of course, we have seen those tech regulations really being put at play, in display in the markets with this massive sell-off that just this week we're saying could be the worst since the global financial crisis. Yeah. We're seeing a little bit of a rebound in today's session with some dip buying, but the concerns are there, especially given that we are seeing the economic growth starting to slow in China, and perhaps people pointing to more monetary easing to support the economy. But as we speak, we have new lockdowns in provinces and cities in China.